Good evening, ladies and gentlemen. John Kelly for Options University on Wednesday, November 23rd, 2011. The disclaimer: option trading and trading in general always has been, always will be very risky, and this week is no exception. Started off with this gentleman, the Vice Premier of China, stating Sunday night to Monday morning that Europe would be in a deep recession. And China itself came in with manufacturing news this week, with the manufacturing index under 50 to 48, which is a 2.5-year low. Under 50 is the difference between expanding economy and a contracting economy. This was not good, and the market proceeded down heavily on Monday. In addition to that, France's AAA rating has been threatened by Fitch and Moody's. Investors, nervous over what was going on in Europe, started dumping Spanish bonds, and in Wednesday was the true disaster. The weekly German bond auction, which has gone without fail, week after week, month after month, year after year, only saw 61% of the bonds purchased by investors. The German government had to come in and purchase 39% of its own bonds. The market did not like that at all. In addition, the rumor on Sunday and the premature announcement on the failure of the Super Committee was 100% correct. However, the rating agencies, S&P, Moody's, and Fitch, came out with announcements they would not downgrade U.S. debt, as automatic cuts would take place instead of the recommendations from the Super Committee. But this also includes $600 billion in automatic defense cuts to take effect next year. In the gold member section, we're going to look at Boeing and Lockheed Martin to see how that will affect it. After the close on Tuesday, the Fed came out and announced they're going to do a stress test on Goldman, Morgan Stanley, Bank of America, Citi, JP Morgan, and Wells Fargo over their exposure to the European sovereign debt, which, as I alluded to earlier, started off the year around $81 billion, but as of the end of June was up to $581 billion, no telling where it is now. So you had that news Tuesday evening. You had the Chinese manufacturing index as you went around the world. It came in as a big disappointment. And then the German bond failure. The market was not going to be happy on Wednesday morning. GDP had been revised from 2.5% growth to 2% negative news. Housing sales came in better than expected. Weekly jobless claims mostly unchanged. Durable goods down but less than expected. Personal income and spending were both up, and consumer confidence was the highest in years. How did this affect the market? Well, the string of consecutive down days continued with a heavy sell-off in the point total. Now, we were down over 100 points in the S&P, over 1,000 points in the cash Dow. However, the volume hasn't even reached average levels. This is not an institutional sell-off. That's the one bright spot of good news about this. And the VIX, which had been in this channel and dropped below it, of course, is back into the channel. Now, the S&P is also back in this channel, firmly in this channel, with 1068, the October 4th low, is the low, 1225 around the top spot in this thing, which now maybe you would extend it up to 1287. We'll have to wait and see if this holds. This level holds on Monday. There is no reason right now for it to hold. There is very little here to stop this from falling another 100 points in the E-mini, another 1,000 points in the Dow. So we have to keep an eye on that. Had the market been dropping and the VIX responding as it did when it moved up in October and in August, I would expect to see the VIX go from current levels down here at the bottom of this channel all the way back up to the top of the channel. It hasn't done it. That has to mean one of two things. Either there really is no fear over what's going on, or there's a lot more downside to come. So earnings news, John Deere had a very strong beat and strong guidance going forward. after the bell on Tuesday. After the bell on Monday, Hewlett-Packard reported they beat, but their CEO, Meg Wickman, said that it'll be 12 months before that company really turns around and has all their ducks in line and be marching forward. Campbell Soup beat with a positive guidance. Dollar Tree came in with a $300 million stock buyback. So, which way to take this market? We're going to look at that in the gold member section next.